Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Wednesday, June 24th. Today on the show, the Information has exclusive reporting that xAI is doubling down on its video and image generation tools, even with looser content guidelines. We'll bring on one of the reporters who wrote that piece. Next up, we'll unpack a report that Meta is looking to build a prediction markets app. We'll also break down the latest smart glasses release. We've then got SambaNova and Vista Equity Partners coming on the show to talk about a new compute initiative that they are working on together. And we will wrap the show with a check-in on the beaches of Cannes, where OpenAI is pitching its ad business. It's going to be a great show, so let's get right on into it. As xAI tries to differentiate itself with Grok, the Information has exclusive reporting that the company is doubling down on AI tools that generate images and videos, although some of the content the company has become known for can be quite racy, according to my colleagues Grace Kay and Theo Wayt, who cover all things Elon Musk, including Tesla and SpaceX and xAI. I want to bring on Theo to walk us through his reporting. Theo, welcome back to the show. It's great to have you here.
Good
Why
to be
is
here.
Grok focusing on video and image content so much these days?
So out of all the products and models that they've developed in-house, image and video are kind of the one area where they have significant traction with users. I mean, the core Grok models haven't been updated in a while. They aren't getting that much attention. In coding, that's a big emphasis for them, but they've done that mostly through the acquisition of Cursor that they're working to complete right now. So when you think about in-house xAI stuff, it's kind of just Imagine and which is their video and image tool.
Okay, and what type of content specifically are they focusing on?
So they want it to be a video and image model that works for everything. You know, if you look at what they talk about publicly, you can use it for commercials, for brand marketing. They have like a preview of a movie that was generated by Grok. But in reality, a lot of the usage is for adult content, pornography, erotica, etc. Because they have looser guidelines and content moderation. And when you have that on the internet, that's just how a ton of people are going to wind up using your service. That's not really unique to xAI, but what is unique is, are there loose guidelines?
And has this been, have they made an intentional pivot to try to diversify away from that content at all? Or is this just kind of the way users have ended up using the platform?
I mean, I would say they don't mind that it's happening, but it's not what they want to talk about. If you read the SpaceX S1, it's hundreds of pages, and the only time that the idea of any adult content on Grok comes up is in the risk factors section where they, warn that it could pose regulatory issues. But it's definitely not what they want to talk about is, xAI Enterprise, Grok for Business, Grok for Government, Grok Code. But in reality, adult content is a gigantic part of their business too.
Okay, and then you mentioned the loose content guidelines. So if this is the way people are using the product, have they at all modified their content guidelines to shift the product at all?
So they're actually very vague about it. And Elon had said in the past that Grok would generate anything that was appropriate for an R-rated movie. But there are definitely examples that are more extreme than that. I wouldn't say that's been consistently enforced. And if you look at like the actual, rules that xAI gives users, they basically say, we can't tell you what the exact rules are. You should experiment and see what you can get away with and figure it out.
Hmm. Now, you talked a little bit in the story about the training component to this. I mean, where are they getting training data for this type of product?
I mean, part of it is that there's a lot of NSFW content on X. Something like a fifth of the traffic on X right now is uh, adult content in some form. And then on top of that, my colleague Grace Kay had some great reporting about how AI tutors that work for xAI training the models have had to read like some semi-pornographic scripts for their job to help train the models as well.
Where do other AI companies stand on this front?
They've totally shied away from it. I mean, last year, OpenAI had, there was this announcement from Sam Altman where he said, we're going to allow erotica, which was kind of vaguely defined for users that they could, verify were adults, but they wound up postponing that indefinitely. So that product does not exist. Anthropic is very clear that they don't allow sexually explicit content, among other, more specialized video and image training for or video and image models like Midjourney. They don't allow it either. So if that's what you're looking for, Grok is kind of the only place to go at this point.
So let me ask you this now: SpaceX is a public company, and so people are very much paying attention to it from that light as well. Do you think that this focus changes at all? Does the focus on this type of content, does it pose any kind of a risk to the company now that it's public?
I mean, it's a tough question, right? Because like for a regular company, I think the answer would be yes. Like they would want to be relatively conservative about this area because it's not launching rockets. It's not what people think of SpaceX for, but it is a gigantic risk. I mean, I just imagine the SpaceX employee in the EU that normally works on satellite policy, who all of a sudden is having to answer questions about, Grok being used to like edit images of children or something. Like that's not what they signed up for. And that's a huge, potential drag on the company in all kinds of ways. But on the other hand, like this is one of the most successful products from an AI lab that is not considered a front runner. So are you just gonna kill it? Like probably not. So I don't know. There's a lot for xAI to consider, and right now it seems like they're doubling down.
Right. Well, Theo, I want to thank you for coming on. That is Theo Wayt, our Elon Musk reporter here at The Information. Meta's CEO, Mark Zuckerberg, is directing his staff to build a prediction markets app that could rival Kalshi and Polymarket, according to a report from the New York Times. The app is reportedly internally known as Arena, and it would allow users to potentially wager on events using either a point system or real money. Joining us now to discuss what this could mean for the company is Jason Helfstein, Managing Director, Head of Internet Research at Oppenheimer. Jason, welcome to the show. It's great to have you here.
Thanks for having me.
So, is prediction markets a good business for Mark Zuckerberg to be getting into, in your opinion?
No. I mean, I think we can make a list of a bunch of ideas that seem like kind of throwing wet paper towel at the wall to see what sticks, and we can kind of talk about why that is. But this does not seem like a good idea. Now, I would say perhaps he wishes there was more, I don't know, intellectual content perhaps on Instagram and Facebook that could then be mined for Meta AI like X has that can be mined for Grok, but this is probably not the way to get there.
Okay, although we've reported that Zuckerberg has talked about launching something like 50 new apps, maybe even at some point. So, feels like this could get launched in the near term, right?
Yeah, I'm not saying whether he is or isn't going to do US. I think it's a good idea, bad idea. I think the problem is you prediction marks only work with their skin in the game with money. So if the people who are predicting are not putting their own hard-earned cash on the line, it just you don't get then we'll call it the engagement value. And engagement value can be data. It could be the time spent. I mean, again, if you just want to capture time spent, maybe, but you've got to have skin in the game, right? That's the whole idea. That's why you look at how much, let's say, dollars are being spent per prediction, right? Or the total amount,
Right.
right?
In other words, you're
Just
saying that
quick.
they couldn't go half in on this with kind of a points-based system. They would have to really create essentially a replica of a product to Kalshi or Polymarket where you are.
100%.
Okay.
Yeah.
And that would then, not that Meta is new to regulatory issues, but that would open itself up to a whole new class of regulatory scrutiny, possibly.
Oh, I mean, in addition to that, you then have to like get more into payments. I mean, look, if you want money, why don't they put a fee on Facebook Marketplace? Ton of transactions are happening. It's free to both sides. Like, why isn't there a fee there, right?
Yeah.
I don't know. I mean, eBay, they charge a fee, right? So, yeah, it's really hard to understand. I think when you kind of take your point about potentially 50 apps, like, is the real question that they are concerned with time spent slowing on Instagram. And, the way to try to reboost time spent is to find more ways for people to engage. Now, they give you kind of a smattering of kind of time spent quotes, right? Like, and it's hard to pattern it or model it. Again, if you look at this over a period of time, it does look like time spent is slowing on Instagram. Still growing, look like it's slowing. We know last quarter daily active people didn't grow. They called out, Iran and kind of WhatsApp and Russia. Okay, we'll see what happened this quarter. But again, it just seems like the reason you would do all of these app projects is because you're trying to find a way to boost engagement.
Hmm. Do you think that Meta would buy their way into the prediction market space?
I'm not sure y- they can buy anything. I mean, this is why you've seen these like acqui-hires where we buy, you know, 47% of it and then all the employees join the company. So we're technically not buying it because we're buying the minority and then all the employees join. So it's
Not even.
unclear.
I mean that's sort of on the AI front, but even a predictions markets acquisition. You
Again,
think that
it's hard to say. You would think under the current administration, it would be easier than if you were under a Democratic administration potentially, but it's hard to say. You don't know until you test it. I mean, I guess we've seen, pretty small deals blocked under the prior administration. Um, I don't know. Facebook was,
Yeah, yeah.
tried to buy one of those bigger companies.
I mean, just take us inside Zuckerberg's calculus here, though, a little bit. I mean, let's look at the menu of things he's working on. He's working on AI. He's got this big compute build out going on. He is also simultaneously saying he's going to launch 50 apps. He's looking at stuff as Wild West, as prediction markets. Um, do you do you see the vision that he's trying to put together here? Does it feel a little bit scattered right now? What's your assessment of the overall strategy?
I mean, if you think that you have the ability using Instagram and Facebook to push consumers into other apps you own and then get them to spend time there and then monetize them that way, that is like logical. Okay. Um, Again, you could argue the biggest opportunity is monetizing WhatsApp, right? And again, whether that's at some point with advertising, at some point subscription, at some point kind of business messaging and kind of business commerce, perhaps seems like the biggest opportunity there. But
But they're not doing that. I mean, they are a little bit, but like they never go for the obvious monetization route. It seems.
Well, I think it's because they don't want to hurt engagement. So I
Yeah.
think any testing where like, oh, if we put an ad in WhatsApp, will it hurt engagement? Obviously, the conclusion is like yes, right? And we've seen Snap kind of finally do it with like, with the ads and the messaging because they've kind of had no choice, but they've also been kind of forced to like go to the subscription route, right? Which is why when Meta announced like a subscription offering, there was a market debate: is this good or bad? I mean, the market tends to put a lower multiple on subscription than advertising, but are you doing subscription because you're running out of room to sell advertising? And then we can kind of talk about, and then, right now it seems like most consumers don't want to pay for AI, right? That's going to be a free product, whereas businesses will pay for AI. So perhaps again, on the business side of WhatsApp, there's the opportunity to sell that offering. Um, so yeah, again, but now think about it. If somebody's in Instagram and you're saying, "Hey, leave Instagram to go download this app and do this other thing," you're then potentially taking time away from the feed and the ability to monetize ads on the feed.
Well,
And
and
if you
yeah, it's happening already with Threads, right? I mean, I see. I did finally download Threads, and I had downloaded it once when it first came out, but I wasn't using it that much, so I got rid of it. But I re-downloaded it because the number of times that I was prompted to leave the app, I was like, okay, I gotta I need to see the content. But yeah, to your point, I mean, that's less time on Instagram then, and then I guess the question is, well, do you have the same opportunity to sell ads across all of these platforms, or were you better off just keeping the one platform, uh, the central advertising ecosystem? I don't know.
Yeah, I mean, look, that's what technically they're doing when they convince you to download Meta AI, right?
Yeah.
Like how you're going to go hang out in that app. Now, I mean, but now let's take a step back. So, as you said in your opener, I mean, all this CapEx, why are they spending all this? It is to have their own version. Most of it, I would say, most of the incremental CapEx is so they can have their own version of ChatGPT.
Right.
Why do they want to have their own version of ChatGPT? It does seem like that the company perhaps is worried that over time people will spend meaningful blocks of time on an AI, talking to an AI, engaging with an AI, and maybe that's time they other would have spent with Instagram and Facebook. And so you'd rather cannibalize yourself than have somebody else cannibalize you from a time spent standpoint.
Right. What'd you think of the glasses that they released this week?
I thought it was kind of a non-event. It seems like it's just an unbrand instead of Ray-Ban branded, where they're getting right a cut of it. Now it's Meta branded, so it's almost like the generic version of the same glasses because I think the
Yeah.
glasses are the same. So, yeah, I think that this is kind of a non-event. I think with these glasses, it's when can you get the battery life good enough that you can wear them all day and not have to take them off to charge them. And we'll eventually get there, right? And I think most people do believe like ambient computing will be something. And whether it's glasses or a pin or a watch or something, like the idea of having, maybe it's a clip on your ear or something, but that you'll have compute with you at all time. But again, you got to get the battery right, and then well, when will the next generation of the glasses that have the heads-up display, like, will that be something that, can be accessible broadly at a somewhat normal price point?
But, I mean, you say it's a non-event. Meanwhile, we have a number of other companies going at this smart glasses category. We obviously had Snap, and that was whatever it was. People were not excited about that product. But Google and Warby Parker have also said that they are working on something together. So is Meta still the clear leader here in this category to you?
I mean, maybe right now in units, but the total number is pretty small. I sense is when Google wants to be a player, they'll be a player. I mean, look, they still put up pretty big numbers with Fitbit, and even though nobody talks about that, right? Even though there's a lot of talk about Aura and Whoop, and you kind of look at the amount of engagement, like still a lot of engagement with Fitbit devices. So look, I think that Google has thought that, the software is not ready yet, or just let's just call the whole product, right? The product, like Google smart glasses, are not ready for the market yet, and when they're ready, they will come, and I'm sure they're gonna work pretty good because 'cause they'll be powered by Gemini and, it'll bring all of your personal information with it.
Big picture here, Meta stock is down about 20% in the past year. What do you think investors are looking for?
So I think going to last earnings, there was kind of a view that, hey, revenue growth and cost reductions are going to be enough so that earnings could actually beat Wall Street expectations over the next 2 years. Then we came out of earnings and people reassessed the view and said, you know what, maybe revenue growth isn't gonna be as strong. So, they need to then maybe there isn't upside to earnings. And there's probably a debate on like how much cost they can still cut out of the business, but still kind of maintain a culture and get the products produced that they want. Now, probably the debate is probably around how the cost to run AI is getting more expensive, right? We know this. You see it with spot pricing, you know, for third party compute, neo cloud compute, as well as just all the inputs that go into building data centers. So the thought is, is Meta going to have to rein in capex, and maybe go back to thinking about open source model, not having a full frontier model. And I think that's probably what investors are playing for right now, which is, you know, if you own it into that moment, right, when they kind of say, hey, maybe we got to lower our skis, we got to rein it back in, the stock probably reacts well. I would argue we're not there yet. it doesn't seem like they're going to back off the very aggressive, kind of pursuit of AGI and having kind of again, their own version of a chat GPT that consumers want to use. So I think that'll be the debate on the stock, probably through, the near term.
Right. Great. Well, Jason, I want to thank you for coming on. That is
Thank
Jason Helfstein, Managing Director at Oppenheimer here on TITV. Private equity company Vista Equity Partners and venture capital firm Cambium Capital this month launched a new company together. Vector Core Compute, also known as VC2, is a cloud services provider focused on inference, and the new company has made a $3.5 billion commitment to SambaNova, an emerging chip company taking on NVIDIA. I want to bring on Monti Saroya, Senior Managing Director and co-head of the flagship fund at Vista Equity Partners, and Rodrigo Liang, co-founder and CEO of SambaNova, to break down the news. Welcome to the both of you. It is great to have you here. Monti, I want to start with you. Why did Vista decide to launch VC2?
It's great to see you, Akash. Look, I think our goal is to provide solutions to the enterprise. And so as we started to see the AI deployments in our own companies and with our end customers, our focus has been how do we deploy the most valuable, fastest inference at the best cost for the enterprises. And so for us, the hyper focus was on how do we actually lower the cost and actually speed up the process of using agents in the enterprise. And the best way we could think about solving that problem was with the launch of this VC2 company, as well as using the Samba chipset as a part of that.
But I'm so fascinated here. I mean, Vista is traditionally known to be, one of the most prolific software investors in the world. I mean, why decide to go to the great length of creating a new compute provider on its own? Why not just leave it to those who have established businesses in that arena?
Yeah, no, it's a great question. Look, we have our 92 companies that are large software providers to the enterprise today, right? So we have over 35 billion of revenue, and we've been servicing the enterprise for the better part of over 25 years. And what we're hearing from our customers is that they want full stack solutions, right? So historically, we were able to provide some of the software solutions and use some of the best partners we have in the world, right? So we have Amazon and Google and Microsoft as phenomenal partners that continue to be partners, and then we also have the large AI providers, Anthropic and OpenAI as large providers as well. I think for us, the question became, as the agentic era came on, the needs for these enterprises has evolved. And you're going to hear a lot about this word tokenomics. I did not invent that word. I'm just using it because everyone else is.
Good word.
And
It's a good. Come on. The word is fine, right? It's a fun one.
in tech, we make up new words to make ourselves feel better every time there's a new wave of technology. Now we've talked a lot about tokenomics, and what we mean by that is the actual value of using tokens by agents. The thing that people are missing is a lot of what we've been doing in AI has been basically facing the human, right? So it only had to go as fast as we were able to read. But the reality is the solutions that we're putting into the enterprise now, which are agentic, is agent-to-agent communication. They need a lot more speed than we were able to get from the traditional AI solutions. So for us, it's truly just going to the enterprise, asking what they want, and what they've come back with is give us a full AI agentic solution, and that includes everything from the software, the system of record, the system of action, all the way down to compute, all fully integrated. And that was the thinking behind VC2.
Right. So, Rodrigo, I mean, this is $3.5 billion. It's a big commitment. Is that just straight revenue coming to SambaNova over the next couple of years? What does that mean for your business?
Yeah, we're super excited about that. It's 3.5 billion is a big commitment, and we're excited to have that as a growth path for SambaNova, but also really the partnership. Like Monty said, I think you look at all these businesses that are looking for much more efficient AI, much more much higher performance, much lower latency AI, and I think having VC2 with SambaNova together gives them a really, really good solution, which allows them to actually compete in a very agentic first type of technology ecosystem.
And Rodrigo, we had you on last summer, nearly a year ago. We talked about the progress your business was making. Tell me a little bit about how your offering has changed in the past year or so.
Yeah, we're really focused on premium inference. If you think of the world, that's running NVIDIA, everyone has services around NVIDIA. They've done such a great job, producing offering that kind of the broad market wants. And yet there's still a demand for differentiation, and where people want ultra low latency, really high performance, where the speed matters. Like Monty said, if you have applications where agents are talking to agents and it's taking, say, 20 hours to compile a piece of software that the agents wrote, if you can actually make that 2 hours, there's significant productivity enhancement. And so we're focused on that premium and offering enterprises that need that, and then providing them the differentiated service. Some things you can use, very large batch size type of inference and actually run that at the lowest cost. But for
Right.
some, you need premium. You need premium because your models are bigger, your models are lower latency, your models are much higher throughput.
Are you still focused on running open source models? That was the focus last time we had you on.
Yeah, we'll continue running open source models, and these open source models are really, really good. They're getting bigger and bigger by the day.
Everyone's talking about. I mean, it seems like open source is like it's having a moment here. People are realizing that we can't run everything on the most expensive closed source models. I mean, I wonder what that's meant for growth for your business.
Yeah, well, look, I mean, I think the world's heterogeneous. I think the closed source models have done such a great job. You look at Anthropic's numbers; there's no doubt that they've done a really, really good job with kind of building services. And I think that there's also a place where open source models are getting really, really good, and you're able to actually run them, customize them, change them, fine tune them with your private data. You can do a variety of things with open source models, including actually delivering at a lower cost for certain types of tasks. And so for our business, where we want to run heterogeneous models, any of these open source models, to some extent, even closed models, fine-tuned models, it becomes a great option for the customers that have that complexity in their business, where they want to run a broad range of types of models in order to power their business.
And the same way that NVIDIA has launched its suite of open source models that customers can build on, do you have your own suite of open source models that customers can use to build? Do you plan to build that out?
Today we really lean hard into kind of the open source models that are available by the community. You got some great models like DeepSeek and Minimax, and then you have some new models that are coming in from Reflection and other folks that are kind of putting models out there that are really good. GPT OSS, look at the Mistral models are coming back, and so there are some really, really good models that are out there, and so we lean into the model that the ecosystem is building.
Do you think you would build your own open source model in the future?
Maybe. I think when looking at needs, I think the market is changing really fast, and like Monty said, with one of the beauties of having this partnership with VC2 and Vista is you get access to kind of what the end customers, the enterprise want, right? And so if there's a need there, we'll kind of see certain types of models that the open source community today has not yet offered. Yeah, maybe
Right.
we could help build those.
Right. So Monty, I want to come back to you. So you have VC2 here. So the game plan is what you're going to rent compute out to Vista's portfolio companies. Is that the business model?
Yeah, the business model is that we're able to go brownfield sites, so we're able to put up compute faster than having to build giant boxes and greenfield builds. So these are existing sites that have access to power. We're deploying Samba into those sites. We're actually proved out that we are able to do disaggregated inference in one of our labs in one of the sites. So we have a heterogeneous offering where we have both GPUs and the RDUs working side by side to get the fastest compute possible for our companies. We will obviously be customers that have dedicated compute from that, but we're also selling it to the community and other folks that are supporting the enterprise. The pure focus is we want to be inference centers for the enterprise, effectively.
But the plan is to expand beyond just Vista's own portfolio companies and sell it broadly, right?
Correct. Yeah. So I think the way to think about VC2 is its own standalone business. It'll have offerings that will supply power and compute to the Vista ecosystem, but also beyond that, they'll have their own customers and other AI native businesses that need access to the same type of compute.
Right. So I mean, in the simplest possible terms, is this Vista saying that we are getting into the neo cloud business? We're setting up our own neo cloud. Is that one way to think about it?
Yeah, look, I think neocloud's an easier way to describe it. I think the way we think of ourselves is we want to be much more technology forward than the generic neocloud kind of label. So I think there's some clouds that are doing some of that. And I think for us, what you'll look to see is that we're going to be on the cutting edge of the technologies, right? So we look at the Samba chipset as one of the best chipsets to provide decode. And so we're using that. We're doing disaggregated inference. We have our own unique networking. And so the way to think about us is we're going to offer NeoCloud type services. We're partnering with Together and others, but much more on the how do we lower latencies, get higher throughput, higher speed, lowest cost tokens to the enterprise.
Right. Rodrigo, I want to ask, you appointed a new CFO in the last couple weeks. He was a former finance executive at another public, a public chip company. My apologies. Coherent. What does that mean for SambaNova's IPO plans?
Oh, look, it's I think as we grow the business and we're moving forward, I think that's certainly something that we, Monti, the rest of the board and investors are all considering as a possible path. But really, the focus right now is build the business. We've got great traction coming in. We've got great build outs like the VC2 build out and sovereign build outs that we're kind of moving forward. And so as we execute, and that's certainly something we'll consider.
Okay, next 12 months, should we expect anything?
Oh, we'll see. The execution is important, right? And so we'll continue to grow. I think we'll have to see what the market looks like as well.
Monti, I want to ask you about investing in software while we have you here in this current moment. How are you thinking about the SaaS apocalypse, and how you think about, is this a buying opportunity right now for Vista? On the other hand, do you want to buy as much if there aren't as many exit opportunities? How are you balancing that trade-off?
Look, I think we lived through one of these transitions in the past, right? When we went from on-premise to SaaS, people thought Amazon was going to build all software applications and that software was going to go away. And the truth is the SaaS market massively exploded with the access to CPU compute that Amazon helped lead and build out with the rest of the cloud providers. And so we look at this as the next transition. And so while people don't realize this, the underpinnings of a lot of the AI stuff, including the LLMs, are just, they're software providers, right? They're phenomenal software providers, but they are software at the end of the day. And so I think the transition from traditional SaaS software to what we call agentic enterprise solutions is the future. So if you can prove out that actual transition, there'll be some really good buying opportunities that we're looking at. So the legacy SaaS companies, it's funny to call them legacy because they've only been around for 15 years, but the legacy SaaS companies that transform into agentic will have the type of valuations that you would expect from fast-growing tech companies in the future. You're starting to see some of that in the public market. So you've seen Datadog and others start to re-rate as they're taking advantage of AI and agentic solutions. So I think software companies that are able to take advantage of that will be winners in the future. And so we built our own agentic factory to convert our SaaS companies to do that, and that's where we think the future is.
Have you marked down your portfolio to match the route in software stocks?
So look, I think the way we look at public comps as one of the variables that impact valuations. So we're lockstep with where valuations are. But the truth is, the businesses that we've now transformed to agentic are growing faster and more profitable. So the underlying business metrics are doing really well. And so I think as you're starting to see the public businesses recover, especially the ones that are turning into agentic, you're seeing that kind of recovery happen in traditional software into the agentic solutions. You'll start to see our portfolio follow that from a public market standpoint.
Right. Rodrigo, before we let you go, we saw news this morning that OpenAI and Broadcom have announced their own inference-focused chip. Is that a threat to your business?
No, look, I think the market is so big, and you're looking at all the folks looking for additional computing. And so, I mean, the semiconductor industry, which I've been part of for over 30 years, has never been stronger. You got so many people that had never been involved in chips, getting into chips, and then I think you're going to see that type of ecosystem is going to actually drive better economics, better supply, better understanding of the differentiation, and then understanding kind of which chips are better for which things. And so, it's exciting to see all these folks getting into this the ecosystem.
Great. Well, I want to thank you both for coming on. That is Rodrigo Liang from SambaNova and Monti Saroya from Vista Equity Partners here on TITV. OpenAI is in Cannes this week. The company is building out its advertising business, and Cannes is certainly the place to be if that is your game. I want to bring on our e-commerce reporter, Ann Gehan, to talk about what OpenAI's playbook has been out there. Ann, welcome back to the show. It's great to have you here.
Hey, Akash.
I wish you were in Cannes. Then we could say it's Ann and Cannes.
Ew, that'd be great, wouldn't it?
Is that a dad joke? That's got to be a dad joke, right? Okay, so OpenAI is pitching its advertising business. What exactly is the pitch that they're making out there?
So, this week in Cannes, OpenAI's pitch has really centered around the fact that it's a really unique place for advertisers to be. OpenAI first kind of said this when they launched their ad business back in February, but now they have kind of rolled out some early statistics that kind of bear that out. So, it's not, you know, exactly the same as a search advertisement on Google. It's not exactly the same as a social media advertisement on Meta, but it's somewhere in the middle. And OpenAI's pitch has really been that ChatGPT is this unique place where users are coming, they're sharing information about what kind of products they're looking for, a trip they might want to take. And so people are in this really kind of unique headspace or mentality when they're using ChatGPT that is really valuable to advertisers because whether someone's looking for, specific information, comparing two products, deciding which one to buy, or just more generally at the very early stages of researching, outdoor furniture or hiking gear they might need for a trip. OpenAI's pitch has really been that wherever people are in kind of their purchase journey, that ChatGPT is a really great place for advertisers to kind of capitalize on that interest.
And you wrote about it a little bit in your brief last night, talking about how OpenAI has changed the way that it is charging advertisers. Where does that stand right now?
So it's not necessarily a change so much as it's been a really rapid expansion. OpenAI first launched the ad business back in February. When they did that, the original way that they were charging advertisers was based on how many views that an ad got, which is good if you are a big brand trying to get as many eyeballs as possible. But often, small or medium-sized businesses, they want more direct, measurable results. So very quickly, OpenAI has rolled out ad campaigns that charge advertisers based on how many clicks they get. And also in the past couple of weeks, they have rolled out ad campaigns that are conversion oriented. So that is where you are charging advertisers when someone takes a specific action. So that could be making a purchase, that could be downloading an app. So OpenAI has really quickly kind of scaled up what they're offering advertisers and tried to, as quickly as possible, catch up to specifically Meta and Google, which are two of, kind of the dominant ad businesses out there that do offer, all of these different types of ad campaigns.
I thought it was kind of interesting that they not only seem to be pitching a place to put your advertisements, but also tools to help make those advertisements with codecs and stuff like that. I mean, it feels like they are rapidly trying to build out a pretty end-to-end advertising ecosystem of products.
Mhm. Yeah, I thought that was super interesting, and that kind of flew under the radar a little bit. The fact that they're pitching codecs as a way to create apps or create ways to automate ad campaigns, because that has been kind of the holy grail for advertisers and marketers for a while. And you've seen Google and Meta take early steps towards this by trying to automate as much of their ad campaign management system as possible. And so the idea is that by automating more of these systems and incorporating more AI, advertisers can more quickly test out, a wider variety of ads. I think OpenAI's pitch partially is that you could use AI to help generate some of the images or creative assets. And so the fact that you could possibly kind of narrow in on the best performing ad very quickly using some of these automated tools or some of OpenAI's AI capabilities. I think that's something that's intriguing to marketers, but also I think opens the door to the question of, do consumers want clearly AI generated advertisements? I think that's a bigger question that OpenAI will have to wrestle with.
Great. Well, Ann, I want to thank you for coming on. That is Ann Gehan, our e-commerce reporter here at The Information. That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. If you can't make it then, episodes are available on theinformation.com, on our YouTube channel, or wherever you get your podcasts. Make sure to follow us on social media, on X, on Instagram, and on LinkedIn. I am already excited for our next show. Have a great rest of your Wednesday. Bye-bye for now.